Okay, so now we're reaching the lion's reversal, which is pretty much, I'm going to conclude everything I just taught you with a model which you can apply to the charts to take trades. Based off of everything I just taught you, you're going to now receive a model which you can trade live. And I'll also show you how I do it live with this. And I'm going to show you examples which I was very public about. So I showed the analysis before I took the trade. I showed when I took the trade, and I showed when I closed it, all in real time, all posted both in my Discord and on Twitter publicly. Okay. Just so you guys understand, this is no bullshit. This is how I made 44% on my account in June. This is how I lost 1% in July. And this is how I made 10.5% in August. July, I lost 1%, not because of the strategy, but because I was being emotional. I took 90 trades that month or 70 trades that month, one of the two, which was way too much for my strategy. So that just shows that I was making bad decisions. Anyways, what is the lion's reversal? So the lion's reversal is pretty much my way of finding a reversal. It's my style of finding a reversal. Now, if I'm going to base it on everything I just taught you, then for a reversal to occur, we're going to need the following things to happen. We're going to need smart money to be in long positions. And we're pretty much the fundamental, at the foundation of it, smart money's positions have to shift from short to long for a bullish reversal. The positions have to shift from short to long. Now, for us to find that, because that's very hard to find accurately. So how do we find that? Well, we have to give room for error. So the way we give room for error is by applying a certain set of criteria. So the set of criteria that I apply to assure that my speculation has a high probability of playing out, I'm going to type that out right now. So 1, you want smart money to realize shorts. 2, you want smart money to dumb money, bearish sentiment. 3, smart money accumulate open longs. Okay, so here you should see it on my screen now. So realize shorts, what does this mean? Smart money realizes shorts at sell side liquidity. So for a bullish lion's reversal, we need to clear sell side liquidity. This means that smart money realize shorts. Now, the second thing you need is dumb money needs to have bearish sentiment, because that bearish sentiment is going to incentivize the dumb money to go short, which is going to allow the smart money to open longs. Okay, that's the second thing you need. Now, the third thing you need is for dumb money to act on that sentiment. So you need smart money not to just be bearish, to actually enter a short position. So when the dumb money enters a short position, then smart money opens longs, and now we have the third criteria. Now I'm going to show you how we apply this criteria on the charts. So let's go on the charts, and I'm going to show you where I apply this. So division 7. So I'm going to start with this. So I'm going to start with, actually, okay, so these are the trades I'm going to be breaking down. So all 3 of these trades were 3 consecutive wins that I publicly shared on Twitter. Okay. I shared the analysis before the trade. I shared when I executed it. You can go on my Twitter and you can find this. I shared when I executed it, and I shared when I closed it. Okay. So this one, I had a bit that I closed above here, and I had a bit that I closed below here later on. I believe, I'm not sure where it was, but overall, the average was around here. That's where I got out. Now, I'm going to explain everything that I did over here, okay, and how it lines up with the logic that I've taught you. So when I saw price trading below this line, I knew that we cleared sell-side liquidity. So us clearing sell-side liquidity means smart money realized shorts, which it gives me my first criteria. So here we have criteria number 1. Now I just looked for bearish sentiment. So what was I looking for us to have bearish sentiment? Well, I was looking for us to clearly close below this level. So over here, yes, we closed, but notice that swift reaction to the buy side. This entices traders to fight the trend, knife catch, and go long because they think the bottom is in. And even though they would be bearish, they would be longing over here. So what am I waiting for? I'm waiting for these knife catchers to get stopped out over here. Indeed, they got stopped out. And then I'm waiting for the dumb money to enter shorts. Now, where did the dumb money enter shorts? The dumb money entered shorts once price interacted with this level. So I waited for price to interact with that level, and then I took my entry down over here. That's where I took my entry. So once price interacted with this level, once price was under the level, we had number two. Number two is bearish sentiment. We had dumb money bearish sentiment. Once price interacted with this level, we had number three. That is dumb money opening shorts, and that is the lines reversal. Now, why is it so powerful? The reason it's so powerful is because, let's just say we have a graph. Now, this graph represents the smart money positions. The line in the middle is the equilibrium. When it's below it, then they are short. When it's above it, then they are in longs. Okay, so and when it's added, then they are neutral. Okay, if smart money has realized all of their shorts, then we are at least at the equilibrium if they realize all of their shorts. Now, if they opened new longs, then we are definitely up here at this point. If they only realize their positions and we don't know if they open shorts or longs, then it might be consolidating around here, and we don't have the type of data to be able to predict where exactly is it in respect to this line. But if we can clearly see that they opened longs, such as they did at the resistance level, then we can definitely and clearly say that price is in the long side. Hence, this means we are in a discount. Price is currently trading at a discount. And that is why I bought over here. Now, where do I decide to close my position? Well, when we interact with buy-side liquidity, then the smart money closes their longs. They realize their longs. So that means that when we go above this buy-side liquidity pool, these positions get sent right back over here. So if they want to move price higher, we're going to have to see an accumulation. And that is why I closed around where I closed, because I knew that their positions would come right back down to equilibrium the minute we interact with the liquidity. And then once we cleared the sell side liquidity and we had bearish sentiment again, that's going to be setup number two. That's where we had another lines reversal. And that is where I entered another trade, which I posted, and you can go on my Twitter, look up these dates, and you will find exactly everything I'm talking about. You will see I entered another trade over here, which I closed right over here. I think I actually closed it slightly higher, but yeah. And then at this point, I was extremely bullish, but I said, I'm bullish, but my system is telling me that I should pay attention for price reversing. So if we are going to if we start going down from here, allowing people to enter longs, then I will flip short. And that is what I did. I flipped short the minute price started rejecting, and I entered my short over here shortly after closing my longs, and I targeted the sell side liquidity, which was resting at these lows based off support and resistance. Okay? Does everyone understand everything I just went over? I would go over this again and again and again, but I am running out of time, and I have to, so I'm going to explain one more thing, and I'm going to explain that thing after I tell you guys about the Alliance Den. So the Alliance Den is a community in which I teach these concepts in depth. There is an 11-day course which you can follow, which will teach you everything about how to trade my perspective of liquidity. So the way I view liquidity, all my findings, all my research, everything I do, all the trades I take are posted in the Lions Den. It's a community with a lot of people that are very active, and there is a very structured format in which you can learn everything that I'm teaching right over here. So if you want to join the Lions Den, which is the best place for you to be if you're looking to learn this strategy, it's the only place you can be if you want to learn the strategy, because I am the only person who teaches it, because these are all my findings. There's other people who may teach you stuff about liquidity, but I guarantee you nobody teaches you in this to this level. And you can either take my word for it, or you can go and take a look for yourself, find out for yourself. So if you want to join the Lions Den, I'm going to post the link inside of my Telegram of where you can buy it. And you will be able to join the Lions Den. There I post every single trade I take, every single one of them. Not a single one is left out. Every single trade I take, I post there in real time. And you can see my stats every month on month on month. I only accept crypto, but I will actually also accept donations to organizations that I believe in, that I like, and I will sort a way for that later, because I'm not, or I will sort a way to pay through credit card. I donate 10 to 20% of my income either way. So if you want to join the Lions Den, I'm going to post a link in my Telegram of where you can read about it and join if you're interested. My concepts are not what ICT teaches, but they complement what ICT teaches. So because ICT at the end of the day, he teaches you how to be the smart money, right? He gives you things that based on statistics can make you smart money if you are able to mature out of your emotions. And it's all based on also on his perception of the algorithm, which for me, it just doesn't click with me. And that's why I had to resort to researching on my own. But if it does click for you, many of my students trade ICT plus liquidity. They will find the liquidity narrative, the liquidity direction, and then they will find a way to trade that through an order block or a breaker block or an inverse fair value gap, balance price range, whatever. So right over here, you can see this would have been the ICT balance price range coupled with the liquidity, and then maybe you would go short with your stop loss up here. I don't know. Based on my teachings, you wouldn't do that, but based on ICT's teachings combined with my teachings for direction, you would. Anyways, I'm going to go over now one more thing, which I said I would go over, and then we're going to call it a class. So let's go over the next scenario. That is the Bitcoin bottom, which I called over here. So I called the Bitcoin bottom right down here, literally on the day of the bottom. I tweeted. You can go on my Twitter and you can find all of this, and you can also find it on my YouTube. I made in-depth explanations and I was ultra vocal about Bitcoin going up to 25K. Which it cleared right over here. Why did I think that? Because we just had a Lions reversal, and you can see I was trading these concepts well before 2023. So it's nothing new. It's nothing that I just invented. I've been doing this for a while. I have experience with this. The best place for you to learn about it is in the Lions Den. Here we have a level of support, and we have the first low below it, which is sell-side liquidity. That's our first element, smart money realizing their shorts. The second element is, while price was over here, more people were fighting the trend based on liquidity and human emotions. People were fighting the trend because it wasn't convenient for them to go short over there. So they were trying to catch the bottom. Knife catchers got stopped out. That's also part of the first element. Now, the money sentiment was bearish because we closed under this. So we have the second element. The third element would have only come once we touch this level. Once we touch this level, boom, everyone entered shorts. And now we have a confirmed Lions reversal. And at this point, your targets are going to be First I have of resistance. Then once price gets up here, there's going to be another resistance which creates liquidity at this high. And then once price gets there, it reaccumulates real quick to create more liquidity at this high. And then once it clears that, it creates a double top, which creates liquidity up here. So once price rejected over here, I also called another move up. Let's go. So first, was everything clear here? Do you see the lion's reversal that I was teaching? I'm also going to show you at the end of this, for those who stick to the absolute end, I'm going to show you exactly how you can trade it. Okay, so here, this was a lion's reversal. Now on to the next lion's reversal. This, I was also extremely vocal about it. I called it beforehand. It's my pinned message on it's my pinned tweet on my Twitter. If you go to my pinned tweet, this is not by coincidence, go over there. There's about 7 predictions in my pinned tweet on my Twitter. Every single one of those predictions played out completely. Every single one of them. I called the S&P, I called Bitcoin, I called dollar, I called so many things simultaneously. Is that by coincidence? I don't think so. Let me show you that real quick. Well, actually, no. You can go and look at that for yourself. Go to my pinned tweet, look at literally every single thing that is in that pinned thread. It's a thread. All 7 predictions, all of them correct. Every single one of them. So now let's see, why was this alliance reversal? And because I entered it literally at the wick of this candle, and I was extremely public about it. And also I posted about it in my Telegram and my Twitter. So if you go back to these dates, you will see that I actually entered over here and I exited literally up there. Okay, that's how I capitalized on it. Now let me show you exactly how I did that. So first off, we need smart money to be in longs, to have longs open. Where do we have that element? Well, yes, we have that element, the third element, we have it over here, but we also have it from here because there's a double top. So smart money is indeed has longs open. Secondly, we need them to neutralize their shorts. We need them to stop out all the retail longers so that they can realize their shorts. That is a sell side liquidity. Here's your first element. And we also need bearish sentiment, which we get the minute price breaks under this trend line. So that is your second element. So here you have element 1, element 2, and element 3. So you already had a confirmed lion's reversal the minute we cleared this liquidity. And then the reaction marks the bottom. So this candle marked the bottom, and that is when I long. Now, let me show you how you can trade this. For those who stuck until this point, you will learn how you can trade this. So the way you should be trading this is once you have all 3 elements, if risk to reward is present, then you need to enter a position. Now, the way you would do that is on this candle, all the elements are offered, but why would you not enter a position on this one yet? Because we hadn't seen a reaction yet. It's still going down. It's still reaching for liquidity. It's still reaching for liquidity, perhaps on the Ethereum chart, perhaps on some altcoin charts that Bitcoin affects. It's still reaching for liquidity, so it's not going to reverse yet. Here, you finally see it finds a bottom. You see this big wick. That's enough of a reaction. This is a medium probability reaction. A high probability reaction would have been after this up candle. That's a high probability reaction. Now, the lower the probability of the reaction, the more risk reward is typically going to be offered to you. So I would take the entry on this one. After we had this one, you would have simply longed the minute this candle closed, stop right over here, take profit. The take profit needs to be where smart money positions go back below the longs. So that means where they're distributing their longs, that's when you want to close your position. So they're going to be distributing their longs at the buy side liquidity, which is, yes, there's some here, but it is mostly over here. So that is why I closed around here. But I actually closed over here because I combined algorithmic theory with liquidity. Here was the first full hourly fair value gap, 26.2K. I called that on my Telegram. If you go to those dates, you will see it. So all of this is nothing new under the sun. It's concept that I've been trading for a very long time and I have a very good understanding of. If you want to join the Alliance, then that's the best place for you to learn about it. I'll try and sort out a way to pay through credit card. Until then, you can pay through crypto. Price is currently $160, but within the next 3-4 days, I'm gonna bump it up to $200. So yeah, if you want to buy crypto, you can do that through Binance. You can do that through Bybit, Kraken, whatever. BingX. There's so many exchanges where you can buy crypto. Coinbase. So many exchanges where you can buy crypto. Anyways, peace and have a lovely day, everyone.